So, hope everyone's having a good day. Welcome back to the channel. Firstly, I want to thank all our new subscribers. We've got a bit of a community growing now. We've only been going 6 weeks and we're heading to 1,000 subscribers. I want to thank each and every single one of you. We want to get to know everyone. We want to provide tutorial, we want to provide training, we want to provide knowledge on cryptocurrency within the community together. So let me know who you are in the comments. Drop me a message and I'll get back to you, I promise you that. So this is part 5 of our trading tutorial course. This is Japanese Candlesticks. If you haven't watched the first 4 episodes, I suggest you go back and watch them now because they all link together. If you have watched the first 4 episodes, welcome back to the channel. This is Japanese Candlesticks. Let's get into it, guys. So, a lesson in Japanese candlesticks. Well, firstly, we'll say what is a Japanese candlestick, and I'll tell you Japanese candlesticks are a technical analysis tool that traders use to chart and analyze price movement of securities, currencies, cryptos, whatever it is that you are trading. So the concept of a candlestick charting was developed by Manisha Homma, and he was a Japanese rice trader. And during routine trading, Homma discovered that rice market was influenced by the emotions of traders. So while he still acknowledged the effect of demand and supply on the price of rice, he also acknowledged and developed the candlesticks that graphically displayed the nature and price movements by using different colours to detonate the differences. So he used green and red, or you could use a different variation of colours, but in this example it's green and red, and quite often it is as well. He was described as a legendary rice trader of financial instruments. Homma dominated the rice markets and he became popular for discovering the candlestick charting method. When the Japanese stock market began in the 1870s, local technical analysts incorporated Homma's candlestick methodology into trading process. So American technical analyst Steve Neeson introduced the technique to the West through his book Japanese Candlestick Charting Techniques. Japanese candlestick charting is now a popular technical indicator that traders use to analyze financial markets, and that's what we're going to talk about today. So we've got 3 examples of Japanese candlesticks, and we'll go through the bullish examples first. And I've got 3 different variations. There's obviously more and you'll see different types, but this is just for this example tutorial. And you've got the first one here, which is a strong bullish candle. You can see that price actions push straight up. It's a full-bodied green bullish candle and it's closed right to the top. So that's described as a full-bodied bullish candle, and that's very, very bullish. The second example is a mid-bullish candle, and you can see that it's got wicks to the high and wicks to the low, and what the wicks represent is the extreme highs and extreme lows of the closing candle. And one thing that I do need to point out, that each candle is represented by its own time frame. So if you're using the daily as an example, each candle is 1 day in time. Now there's a lot going on inside each candle, and within the smaller time frames you can see that action that's going on. There's lots of price patterns, there's lots of indications to tell you what the likely direction of movement is, and there's lots going on within each candle. So we're there to decipher what's actually happening behind the scenes, and that's why we go into lower time frames to check, and that's why the lower time frames tend to be our trading time frame and the higher time frames tend to be our bias or identification of the trend. So the third example here, we've got the negative bullish candle. So price has started and we've pushed price up. It's pushed price right to the top, and then the bears and the sell orders have managed to push price back down to the lower third of the full-bodied candle. So the extreme high and the extreme low of this candle is represented by exactly the same as our example 1, apart from the bears have managed to push this back down. There was a sell wall or whatever it is, it was an area of structure or something has managed to push that back down, and we get a clue that the price is likely to get pushed down again on the next candle. So we can decipher clues within each candle, and we'll have a look at the bearish version now. So the bearish examples, we've got 3 examples here again. You've got the first one, which is the full-bodied bearish candle. Price action started at the top here, and the bears have managed to push it right down. Not much of a fight from the bulls here in this one. No extreme low, where there's been lots of buy orders, and bulls managed to push price action back up. The bears have certainly been in control in this one, and that's what that candle's telling us. Second one, neutral bearish candle, and at some point price action's pushed up to the top of this range, signalled by the extreme high of the wick at the top, and again to the low of the range with the extreme low of the wick at the bottom. So a bit of indecision there, and there's no winner between the bulls and the bears. It's a mid-range bearish candle. So price action started here, moved up at some point, all the way back down at some point, and then indecision ended in the middle. So mid-third bearish candle. And the next one is the bearish bullish candle, which this one, example 1, at some point example 3 has done exactly the same, but at the end, the candle close, the bulls have managed to push price right back up. So although the entry of, or the start of the candle, the open of the candle was at the top, and we closed lower with a red candle, a bearish candle, it's showing you that there's buying power, and there's a lot of price action, and a bullish price action and bullish momentum, which is pushing that back up. So there's the bearish examples. The reasons why I show you these examples of Japanese candlesticks is because I like to use Japanese candlesticks as additional filters to an entry of any of my strategies. So you'll often hear me talking about higher high, higher close candles, and what a higher high, higher close candle is a candle which closes above the previous candle. So if this candle here had a wick, if that candle had a wick and this candle didn't close past that wick, that's not a higher high, higher close candle, and that's not defined as a higher high, higher close. So one of the reasons of my entries for pretty much all of my strategies is to have that higher high, higher close, and that's in conjunction with, first and foremost, structure. That's the thing that I look for most. I want to be at support, I want to be at strong support, and I want a signal that price action is going to move in my direction. So that's why we stack up probabilities, and that's why we can use Japanese candlesticks as filters to do that. So we'll have a look at some examples on the charts now. Right, okay, got Bitcoin up on this example on the daily chart. And what I thought we could do is have a look at these individual candlesticks and see if we can get any clues from those individual candlesticks or set of candlesticks. So we've been trading in an uptrend here, which is following a huge move to the downside, and an upward channel following that huge move to the downside is a bearish move, and it's expected at some point that price action is likely to continue lower. There's a higher probability of that as far as the pattern's concerned. So we've moved up in a series of higher highs and higher lows, and we're at an indecision point here, and you can see that we broke the trend and we had a strong bearish candle here. We've come back and we've retested this trend line, and that was met by a huge bearish candle, full bodied nearly, not much of a wick to it, which is telling us we're likely to continue a move downwards. So within the next 2 candles, and this is the daily, remember, so each one represents a day, within the next 2 days the bulls have managed to push up, but not as high as the previous big bearish full-bodied candle. So that's telling us that the bulls are fighting back, but they're not fighting back strong enough. There's a bit of an indecision candle here, a bit of an indecision candle here, where it's in the mid-range, so we're not sure, and that was met by a strong bearish reaction and another strong bearish reaction. So the bulls are fighting back, and you've got a doji candle in the middle, which is complete indecision. We don't know which way price action is going to move. So if you were trading, that's not a good entry. It's not a good rule for entry. It's not really telling you much. There's indecision. That was followed by the bearish candle, and that's telling us it's a 3-bar reversal. You've got your lower low, lower close, and although you're met by this huge bullish candle next, we know that from this set of candlesticks that we're likely to continue and move to the downside. So that higher high, higher close, big bullish candle was met by an even bigger bearish candle. So you can see that it's bearish, 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 and we're just continuing the move down here. So let's have a look, see in this range where we're trading sideways, to see if there's any clues of what price action is likely to do next. There's your floor, that's your support level, and although that you've got capitulation wicks here and here, this is where the base is held. So you're moving sideways in a sideways range, and follow in and move to the downside again. This is a bearish move. So we're at this point here, which is the point of decision. Are we going to close below this point, and are we likely to continue the move down? We did actually close below that point, and that was a full-bodied bearish candle again, met by an even bigger bearish candle to the downside. So you can see that once you've identified the trend, once you've applied your trend lines, you can use the stochastic as well to tell whether the price action's overbought or oversold as part of your entry. You can use Japanese candlesticks as additional filters for entries, and you can see that there's certain things that you can do to stack up the probabilities in your favour as to whether your prediction is correct. So we'll put it all together in the next episode. We'll do a practical application, and we'll create a strategy together in the next episode. So don't forget, if you did like the content, give it a thumbs up, share it with your friends. It does mean a lot to us. Like I say, the community is growing really quick. Appreciate each and every one of you. Stick your name in the comments, stick any questions in the comments, what you would like us to cover, and we'll be happy to go over that next. Don't forget to subscribe and hit those notification bells so you know when we release our next content. Thank you so much. Thank you. Enjoy the rest of your day. Take care. Goodbye now, traders.